Welcome to the first episode of the Credit Frog Podcast. My name is Stan, and today we're going to be going over how to start on your credit card journey. Now, if you're here because you're thinking about getting your first credit card, you're definitely in the right place because we're going to be going over some main ideas and concepts that you may want to be familiar with when applying for that first credit card. And it can be a little complicated, so we're going to go ahead and divide all this information into three separate categories. The first of which is going to be before the age of 18, because there are special circumstances that apply to that age range that I want to talk about in more detail. The next is going to be between the ages of 18 and 21, and that's because that age range is the best time, I think, in my opinion, where you could get your first credit card and really start to build that credit score and make your credit score really, really great for the future. And then the third section is going to be when we talk about people that are over the age of 21. And so sometimes you may not have thought about credit cards or looked at credit cards until after you're 21 years old. And so that's why I want to cover that section in more detail. But with that being said, let's just go ahead and jump right in. Okay, so let's first start with those of you who are under 18 years old. And the first question I want to ask is, why would you want to have a credit card when you're under 18? And there could be a number of reasons for this, but I think the best answer would be because you want to build your credit score. And then that actually kind of gets us to the second question, which is, why would you want to get a credit score now when you're under 18? Usually when you get into adulthood, 18, 19, 20, you're going to start living on your own, hopefully, and you'll be having to do other things like pay bills and pay rent and things like that. When you have a higher credit score, you can actually successfully apply to live in an apartment for rent. Oftentimes, a lot of people rent for an apartment and they have to have their credit pulled, and if it's too low, the apartment won't accept their application. And so having that higher credit score is actually pretty important. Also, if you want to buy your first home or buy your first car, you may want to apply for a mortgage or a car loan from a bank or from the dealership, and they'll obviously run your credit. And if your credit is too low, you may be stuck with a very, very high interest rate, which would cost you a lot of money over time. And so building that credit score as early as possible is always the best thing to do. Now, what is a credit score? For that matter. So let's go over that real quick. It's 35% made up of payment history, 30% of credit utilization, 15% of average age of accounts, 10% new credit, and 10% types of credit. And so when we think about applying for a credit card when you are under the age of 18, the main factor you're looking at is that 15% average age of accounts. Because if you have someone apply for a card earlier rather than later, you will have a higher length of time for credit. But this kind of gets into our next topic, which is going to be how can you apply for a credit card when you're under 18? There aren't many ways to do that just because there are federal regulations that don't let you do that, but you can become an authorized user on someone else's account. And what an authorized user is when someone else adds you to their account and pays the bills, but it kind of is the manager of your account, but you yourself can get a card with your name on it and use it as you would per whatever the rules are from the primary account holder. Authorized users are not just for people under 18, they're for anybody, but I think it has particular importance to those who are under 18 because that's how you can attach yourself to someone else's existing credit score or existing credit account, and you can use their hopefully good history onto your credit report. And so what other things that kind of come with authorized users is the payment history and the credit utilization too. So clearly with those things in mind, you want to make sure your authorized user, your primary account holder has very good financial habits, because if they don't pay their card on time, if they have a lot of debt, if they pay a high interest rate, if they use their cards up to their credit limit, those things are all going to populate onto your account too, and that's actually going to drag your credit score down. So you want to make sure when you become an authorized user on someone else's account, that person is going to be very financially stable and have good financial habits. And the most popular thing I see is your parents will be able to add you as an authorized user to their account. Some parents are actually very financially savvy, and they actually add you to their account, sometimes without you even knowing it, which is something that is a different topic for a different day. But the earlier they add you onto their account, the more the more time is on the credit card is on your account for more time, and that will make your credit score even higher. You have to be careful though, because some banks do have age limits on their accounts. Not all of them do, but you have to check with your local bank and credit union. For example, Bank of America, Chase Bank, and Capital One, and Citi for that matter, I don't think they have any age restrictions. So even if you're 2 years old, your parents can put you as an authorized user on their account as long as you have, full name, social security number, things like that. But banks like American Express, for example, they actually have a minimum age requirement of 13 years old. And so that's a discussion between you and the primary account cardholder, how you want to do that. Clearly, it's better if your primary cardholder talks to you before they add you as an authorized user. But sometimes, in certain situations, I can see people or parents who are financially savvy, they just add their kids their authorized user account and everything is fine because they themselves are already financially stable. Another facet of this is that sometimes you don't even get the physical card. Sometimes your parents may add you as an authorized user and they don't even give you the card, so you can't even spend on it. So basically, it's just there on your credit report, getting that data, getting that good payment history, getting that good utilization, and also lengthening that average age of accounts. But you just can't use the card. And that's actually, I think, one of the best ways to do it. Again, I'm not a parent, so I don't have personal experience with this, but I think that would be one great way to for your parents to be helpful to build your credit when you are, either a kid or a teen or whatever age you are if you're under 18. So some question to ask for you is this person that's a primary card holder going to be in my life long term? I think that's important to ask because when authorized user gets added to, when a primary card holder adds you to their account as an authorized user, they that all that history will come to your account. But if they take you off, all that history also gets taken off. And so if you're, for example, you have an older friend or something, that person may not be the best choice to be asking for to be an authorized user just because that person may not be in your life long term, whereas your parents typically will be in your life long term. And so that would be probably the best option to ask if that is available to you. The second is the primary card holder good with money? Like I mentioned before, if the primary card holder has a lot of debt, if they don't pay their bills on time, it's not worth it to ask them to be an authorized user because that's going to reflect onto your credit report, and you don't want that because that's going to actually lower your credit score. So you want to make sure that person is financially stable, they have good financial habits, they pay their credit card bills on time, they don't really carry any extra debt. All that stuff is really, really important to ask when you're thinking about adding yourself as an authorized user to someone else's account. And the last thing is, will I get the physical card or not? I think that's a discussion, especially if you're a teenager between like 13 and 17. That's when I would think that your parents may feel that you are able to have a credit card and be able to build those good financial habits. So I think that's a discussion between the primary card holder and the authorized user. And so think about that. But I think most people would likely have you not have the physical card, and then you could just get that credit history and get that boost your credit score without having to deal with the potential of using that credit card or overusing the credit card. And so that's something that, again, you can discuss with whoever the primary card holder is. From my standpoint, I've actually never had an authorized user. I was never an authorized user on my parents' account, or never had one before the age of 18. I wish I did. I didn't actually know about that credit score boost until much later, even after I was 21. But had I known then what I know now, I would have asked my parents, who were good with money and who were paying their bills off on time and in full, hey, could you add me as authorized user to your credit cards? I think that'll be very helpful for me to build my credit and be in a better situation when I eventually become an adult and go through all those things that I just mentioned from before. Now, having said this, is that something that you have to do before, or you have to do it to be ready to go to apply for credit cards later? No. I mean, you can really not have this done and you can still be okay. But if you have the option of adding or becoming an authorized user on someone else's account who is financially stable and who is good with money, that can really give you a boost when you apply for that first credit card when you are over the age of 18. So just to recap, if you're under 18, definitely try to become an authorized user on someone else's account who is financially stable and is good with money, and that will really set you up for success when you're able to apply for that first credit card when you're the age of 18. Okay, so let's move on to the next age range, which is between the ages of 18 and 21. And to be honest, this is one of my favorite age ranges to talk about because at this age, you're able to really set yourself up for great financial success if you do this correctly and you start to develop these good financial habits. So I think the first question I'm going to ask at this point is, why would you want to get a credit card at this particular age now? Well, just like when you were before, when you were under 18 years old, you want to build your credit score. The same thing would apply to when you're between the ages of 18 and 21. You want to make sure that you apply for credit cards early so you can build those average age of accounts on your credit report, and that's going to really help with your credit score as you move forward in life. But at this point, it's different because before, when you were under 18 years old, you couldn't actually apply for your own credit card. You're actually dependent on somebody else as being the primary card holder. But now you have the opportunity to get your own credit card on your own account and start receiving your own bills and pay those bills off, hopefully on time and in full, yourself. So you develop that good financial habit. You develop those the habit of really making sure that you don't get into credit card debt. And that is something that you can really practice a great deal when you're between the ages of 18 and 21. The other thing that I want to mention is the authorized users, they can actually be erased too, like we mentioned in the last section. So you always want to have something on your credit report that is uniquely for you, because if you depend on other people's for their authorized user, or you are unauthorized on someone else's account, and they, for whatever reason, take you off of their account, all that history will be erased from your account. And you want to make sure you have your own solid footing on your own credit report. Like I mentioned before, you also want to make sure you develop good financial habits. This kind of goes back to the credit score, the breakdown that we talked about in the first part, where we talked about payment history and credit utilization. The payment history portion, that basically means you want to pay your bills off on time. So when you get the credit card bill, you'll get that bill, and so you can pay that bill off on time, and you want to keep doing that every single month and make sure you develop that habit of paying that bill off in full all the time. Of course, if you pay just the minimum statement balance, that is also going to qualify as a on-time payment. But if you start doing that, you may start to fall into the trap of thinking it's okay, which it's not really okay. You really should be paying the bills off in full. So develop that habit when you're now in your 18 to 21-year-old range to make sure that you are, again, developing that good financial habit. The second is credit utilization. And so this is good because it'll teach you, once you get a credit card, you'll have a credit limit on that card, and you want to make sure you keep it under 30% in terms of the utilization. So if you had, for example, an $1,000 credit limit, you want to at the most use about $300. If that, I would recommend 10%. And actually, I'll get into the story later on, but I always set my limit at 10% just because I wanted to make sure that I never went over that and kept my credit score as high as possible. So if you did 10%, for example, on a credit limit that was $1,000, you'd only spend at the most $100 on that card per billing cycle. And so now that we know about why you'd want to get a credit card between this age, what kind of cards can you get? Well, at this age range, 18 to 21, you probably are just out of high school, starting college, or starting your first job. And so that actually reflects into the types of cards you can get during this time frame. And so the two types of cards that are the most common are actually the student credit card and the student credit card and the secured credit card. And so the student card is exactly what it sounds like. If you're a college student or a student elsewhere, you can apply for this type of card, which typically is a card that is very similar to the regular type version of this card, but the rewards may be dampened, and it's actually specifically tailor-made for students. There may be some incentives for you for getting good grades, or for paying your bills on time, or having good monthly, good monthly habits like I mentioned before. So those are features of the student card. Also, it's important to know that the student card is an unsecured credit card, which is different than the second option with a secured credit card. So if you're, for example, someone that is working, you can get a secured credit card because you're not a student. And the way you could do that is you put money down to the bank or credit union that has a secured credit card, and then you can use that money that you put down as your credit limit. So there's a collateral, so to speak, that the bank can use in the event that you can't pay your bills back on time. They can keep your deposit down to keep as collateral. Now, what's interesting is you can actually be denied for a secured credit card if the bank or credit union thinks that you are a high risk to them as a borrower. They can just say no. And so that can happen, so just be aware of that. And you may need to show proof of income or get a cosigner for this type of card as well, because when you're under the age of 21, it's very hard to get credit cards that is not either a secured or student card because of this act that was passed in 2009 called the Credit Card Accountability, Responsibility, and Disclosure Act. And so it basically provided a lot of consumer protections, but one of them was it made sure that the credit card companies couldn't prey on or poach younger individuals in college between the ages of 18 and 21 to get them credit cards and to get them kind of spiraling down credit card debt at an early age. And so some teenagers, some adults between 18 and 21, they are more mature financially. Some are not as mature financially. So I hope that you're in that first category where you actually want to learn good money habits, pay your bills on time, pay them off in full, and that's going to set you up for some success. And so those are the types of cards you can get. So what kind of card do you think you want to get? Because there's a lot of options out there in terms of what types of cards are available. And so there are three options I'm going to mention in this podcast here. The first is going to be the one from your local bank or credit union. And so that's really helpful because ideally, and I think in this day and age, a lot of teenagers and young adults will have their own checking account, whether it be through their parents or they set up one up by themselves. These accounts are going to be with your local credit union or bank. And so because of that, the bank is going to see your financial statements and kind of know where you're at financially. And so they have the most history on you. And so when you apply for a credit card through their system, that will be factored into whether your application gets approved or denied. And so that would be the first place I would start. The second card I'd recommend is the Discover Student or Secured card, because Discover is great because they actually have a really it's easy to get approved for their card when you're in this age range. They are really geared towards this this type of borrower. And so if you're a student, they have this card called the Discover It card and the secured card as well. And that card is great because it gets you 5% cash back on rotating categories. Those categories are released every quarter and usually have a limit of $1,500 per quarter, which if you're a student or just starting out, you may not even need to worry about that because that limit's maybe higher than you need. But what's also nice about this particular card in general is that they have this promotion going on that's been going on for quite some time now called the Unlimited Cashback Match. So you get 5% cash back on rotating categories, and then you get 1% cash back on everything else. But because of this promotion for the first year, everything is doubled. So you'd get 10% cash back on the rotating categories and 2% cash back on everything else, which is actually really nice. I think it is good if you are thinking about using the Discover card exclusively for the entire year. And it would be a great first credit card to use to build that credit history, develop those good financial habits, and at the same time get a lot of great rewards at the same time. So that's something to think about as well. The last one I want to talk about is called the Chase Freedom Student Card. And that card is obviously with Chase Bank. And when we talk about this more in kind of the next section with those of you who are over 21, the Chase Freedom Student Card is important because a lot of times when we look at the points and miles cashback credit card game, you want to start with Chase first because of their notorious Chase 524 rule. And what that rule is, and we're not going to perseverate on this too much, is that, if you have 5 or more cards within a 24-month period through Chase or other banks, Chase can automatically deny you for another card. And so typically from that perspective, you want to have more Chase cards early on in your journey as compared to other cards just for that reason. So if you're banking with Chase already, that's excellent because then they, again, like you mentioned from before, they'll have that financial history on you and they could apply you to the Chase Freedom Student Card. And once you graduate, they can elevate you into the unsecured version or I would not say unsecured, but the adult version of that card that's not a student card that, you can start using that card instead. And so it's a really nice way for you to start as a student card and then move on to the actual Chase Freedom Flex card, which is what that card will be transferred into when you finish up with college. I think you can also get the Freedom Unlimited card too, but we'll kind of leave that to the side. So the next thing is, how often will you be applying for a new credit card? That is a good question to ask too in this situation. So in my opinion, you only need like one card or two cards at the stage between 18 and 21. Really, the goal here is to get your credit score up first and foremost. And the second one is to develop good financial habits. The important thing to think about is if you have a lot of cards at the very beginning, I think that's really good. I guess in the first couple of years, but at the beginning, you want to have one or maybe two to develop those financial habits. And remember, when you have one card, for example, you apply for one credit card, and all of a sudden you apply for that second card, the average age of accounts that you had will now be cut in half. And that's going to hurt your credit score, especially at the very, very beginning when you only have one or two cards to start. And so just think about that as you kind of think about what kind of student cards or secured cards you may want to consider during this period. And I want to kind of tell you about a personal story about this so you kind of know where I'm coming from. So when I was in college, it was around 2004, 2005, and I went to Tufts University in Boston. And at that time, clearly, it was before the Credit Card Act of 2009. So there really wasn't anything, there was no such thing as a student card or secured credit card. And so what was important for me was to get my first credit card. And at the time in Boston, the Boston area was dominated by this bank called Fleet Bank. And Fleet Bank was everywhere. They had ATMs everywhere on every street corner. And at the time, it also was being bought out by Bank of America. And so before I went to college, I did set up a checking account with Bank of America, knowing that when I would move to Boston eventually, that was going to be a bank that was going to be the most prominent in the area. And back then, online banks really weren't a big thing. The internet was just out for about like 9 years at that point, so it wasn't really that developed as it is now. So I still enjoyed using, or I would say, I still think that banks that had physical branches were ones that I trusted more. So I definitely wanted to have a regional bank that I could go to do deposits, things like that. And so basically I tried to get my Bank of America card, my credit card with them. And every time I would go there, I would get denied. So I would apply for the credit card like I mentioned to you earlier. If you have a bank that is local, you could apply for that credit card. For whatever reason, Bank of America didn't like me, so they kept denying me when I was, a freshman in college. So I did what any sane person that would do when you get denied for a credit card, and I went to American Express and I applied for their credit card, and they approved me on the first go. So that was my first credit card ever, was my American Express Blue Cash card at the time. And so that was really great because at that point I was able to understand that I could now use this card and build my credit. Now, of course, I got approved for that card, but that card was only had a credit limit of $500, which was clearly not a lot. But because I knew that I only wanted to spend 10% of the utilization of that credit limit, I can only spend around $50 on that card. So I decided at that point that I would use that card once a month when I went out to dinner with friends or something, and I would just put one charge on that card, and then I would just let it ride for a month, and then I would pay that charge off in full. And I think that was really good because it helped develop that good financial habit where I was able to see the bill, see that I spent maybe like $14, $15, and it was a reasonable charge. So I could actually pay that off and feel good about it and like feel successful that I was able to pay off my bill on time. And back then I think I had paper statements, so I just had it mailed to my college address or something. For the other expenses, I did actually use my debit card. I think that there is some utility to using debit cards more frequently as a college student or a younger individual, just to develop that sense of treating your credit card like a debit card. So if you don't use a debit card, you won't know what that feels like. So the debit card can deduct money straight from your account, so you know that that money's gone. Sometimes credit cards feel like, I have $500 limit, I can spend up to $500. That's clearly not the right way to look at it. And so I think that using a debit card for the first 6 months to a year while you have a credit card is still a good thing to do. And that's exactly what I did. Now, like I said before, I tried to get the Bank of America card every year for the first year, my freshman year, my sophomore year, and I just, they kept denying me. My third year, actually, they did approve me for that credit card. So that was great because I was a junior at the time, and at that point, I had moved out of the dorms. I didn't have a meal plan anymore, and so I was able to transition from using my debit card and my American Express card to using that Bank of America Cash Rewards card, which is now called the Customized Cash Rewards card, and my Amex card as my two primary cards for my expenses. And so I basically at that point, I think that was 2007, I was able to just transition completely away from debit cards. I stopped using them. I just used my credit card for all expenses. And at that point, 2 years later, I had been doing the debit card thing and the one expense on my American Express card. So I had a lot of that financial training in my brain already over that past 2 years. And so that's really important for me. I think that really set me up for some good financial success later on because I was able to get into that habit of making sure I paid that bill off on time in full. And now when I transitioned to having more credit cards, I was able to just use credit cards and they felt to me like debit cards. I mean, essentially, because I would always make sure that I didn't charge more than what I had available on the credit card, so I know I could pay it back off in full and on time. And so, that's something that I think I wanted to reflect on is telling you that, this is a good opportunity to really set yourself up for success with credit cards in the 18 to 21-year-old range. Again, there are a lot of different options. There are student cards, secured cards, and unsecured cards. But when you start getting all those cards together and you start getting more and more, maybe 2, 3, 4, or 5 credit cards, it's going to become more easier to manage when you have those good financial habits backed into, when you had been doing them, during this time frame. Okay, so let's move on to our final section, which is for those of you who are 21 years and older. So what kind of things do you want to think about when you're applying for credit cards in this age range? Because maybe you decided you don't want to get a credit card when you were younger or you just didn't think about it. So is there anything that's different between the other two age brackets that we just talked about? And it's nice because it's not really that much different. I think the thing that I would want to point out, in more detail is that now that you're over 21, you probably have responsibilities. You've probably had a checking account for a while and you've been, paying bills and doing all the adult things that you would typically do with money. So you want to make sure that before you dive into credit cards at this point, that you have already developed good financial habits first. And so what that means is very simple things like, making sure you spend less than you make, making sure that you never buy something you can't afford, and you can think about how you would use a credit card. So if you had a checking account, you probably have an associated debit card, so you probably use a debit card in a certain way. You want to make sure that you use that credit card or that potential credit card like a debit card, and you also want to make sure that you always would pay your bill off on time and in full. So say you have electric bills and gas bills or utility bills, if you can pay those bills off on time, it's more likely that you'll be able to pay your credit card bill off on time as well. And so making sure you have those good financial habits is very important because there are whole industries that are built on helping people throughout their debt journey, and we don't want to put you into more debt by getting credit cards. This is supposed to be something that can add value to your life, and you always want to be on top of your credit cards because otherwise the credit cards will be on top of you, and you never want that to happen. So make sure you have good financial habits. And so the next question is, why would you want to get a credit card in the first place if you can manage your life already with a debit card or with a checking account? And I think a lot of it comes down to the same thing like I mentioned from the last two sections, which is to build your credit score. So again, if you want to rent an apartment, if you want to buy a home or buy a car, and you want to get a home loan like a mortgage or a car loan with a good interest rate, you're definitely going to want to have a good credit score for that. And one way to build that credit score is with using credit cards and using them responsibly. The second part of this, and actually this is what basically a lot of our YouTube channels are built upon, is maximizing credit card rewards. And that's actually the fun part about this, because if you have the ability to have good financial habits and you've really set that good foundation for yourself, now you can get into extracting value from the credit cards instead of the credit card extracting value from you. And so maximizing and being efficient with those rewards is really the fun part of credit cards, but they can only happen if you're already good with money and you're already financially stable and you practice those good financial habits like we mentioned from before. So what are the types of cards that you can get with, when you're over 21? And so the focus is actually on unsecured cards. Now, of course, you can get a student card, a secured card if it's your first time as a 21-year-old, but I would imagine, trying to aim for that unsecured card first is better because you can totally skip both of those student cards and secured cards, which are primarily made for those of us who are under 21, between the ages of 18 and 21. And so I would recommend going for the unsecured credit cards. Again, we talked about this in the last section. If you decide to go with student or secured cards, Discover Student Secured is a really great card to start with because of that cashback match they have going on for about a year or so. For the first year. And so that would be a great card to just have as your primary card for like 1 year or so and just, make it simple. The Chase Freedom Student also is a very good card if you are a student, but if not, there's no secured option with Chase from what I can remember. So I think that I would start with a Discover Student or secured card, or even the Discover It unsecured card, because that card is really made for those of you who are beginning their credit card journey. And that would be a good option if, they are able to approve you with that. Some questions to ask about this section in terms of if you're over 21 is, how often will I be applying for credit cards? And I think what's really helpful to know is that when you first get your first credit card, you want to make sure you, again, develop good financial habits, get in the habit of paying off your bills on time and in full. And I would recommend 6 months to a year after your first card. Not to say that you couldn't get more cards during that period, but because you want to focus on getting into the habit of paying off those bills on time and making sure that you can afford what you can spend, afford what you spent on the card, that would be a very good period to develop that skill. And I think that you need to make sure that you have that skill developed before you jump into more credit cards, which will give you more opportunities to spend money. But you want to make sure you keep your spending to a minimum, even if you have these credit cards, because you never want to buy anything you cannot afford, because that way you'll get into credit card debt and then you'll be down into a downward spiral where you don't want to be in. And so how often are you applying? Again, I would say 6 months to a year for your first card. Just wait for that time. Your second card could be probably around that time, again, 6 months to a year. And then after that, I would say no more than 3 months. If you're doing pretty well and you feel like you're good with the money, you're good with your financial habits, then you can certainly go a lot faster than that. But that's going to be more on a case-by-case basis. I think those of you that are starting out should really take your time to, again, develop those really, really good financial habits. And then it comes to the point of, there's so many unsecured credit cards out there. Like, which ones are the best ones to start out with if it's not the Discover It card? Oftentimes it goes back to the maximizing credits and rewards. I would start off with any no annual fee cashback credit cards. Cashback I use as a very loose term because there's a lot of cards these days now that actually have flexible point currencies that can be used for cashback or for points and miles for travel. Some examples of this is pretty much every major bank. So you have banks like Chase Bank, American Express, Capital One, Citibank. All of them have a point system, but those points can be converted to cashback if you so choose. Although I think Chase is probably the one that's the easiest and most flexible to use among all those issuers. So a 2% cashback credit card is a very common credit card that is available, and that's a great place to start because you'll always be getting that 2% cashback no matter what the category is, and so it's pretty easy to think about. So things like the Fidelity Cashback Visa, the Wells Fargo Active Cash, the Citi Double Cash, the SoFi 2% cashback card, all those cards are great options, and most banks have some version of this card, whether it be 2% or 1.5%. Those cards would be a great way to kind of get started and can help build on that credit card portfolio that you're creating at this point. You also have these 5% cards that are no annual fees, so things like the Discover It that we talked about from before, as well as the Chase Freedom Flex. Those are great rotating category cards, and those cards can help train you to be aware and active in using your credit cards for the right category during the right period. Because they switch so often, I think it helps train you to be aware of what categories are on which card and to how to maximize that as well. And there are plenty of videos out there that go over what are some really good 5% cashback cards. There's also ones that are more stable, like the Citi Custom Cash, where you get to not choose, but you can, decide to use that card for just one category and then get that 5% cash back on all the expenses for just that one category. Like I mentioned before, you can also get cards from your local credit union or your local bank. Those are also very helpful because if the bank knows your financial situation already, hopefully it's good, they can more easily approve you for their card. Again, hopefully that's going to be an unsecured card. But of course, if the unsecured is not an option, getting a secured card is the next best option because you want to start building that credit history on your credit reports so that when you apply for your second card or third card, you have that good history backing you and is behind you. And so that's kind of what I would say for those of you who are just starting out when you're over the age of 21. Again, the focus is going to be on obviously building a credit score, but then you can throw in that added bonus of having to look at the multipliers and the cashback rewards and also determining if you're team cashback or team travel. I think there's a whole, movement with credit cards about maximizing points and miles and cash back. And there are tons of videos out there to look at, as well as some podcasts as well. But I think to start, no annual fee cashback credit cards are the way to go because therefore you're just getting that rewards value back without having to worry about those annual fees. So those are my tips for those of you who are just starting out on your credit card journey. Again, credit cards can be a great way to build your credit score as well as to be able to get you great value on the everyday expenses that you make on your credit cards, but they can also be dangerous as well. And so with that in mind, I'm going to leave you with these 3 final tips. The first is that credit cards are not for everybody. There's actually, like I mentioned before, a whole industry built on getting people out of credit card debt. And that's because there are a lot of people out there that can't control their spending when they're using credit cards. And so they see the credit limit of $2,000, $5,000, $15,000, and they just can't help themselves and spend that money, even though they don't have that money available to pay back the credit card companies. And so if that's you, that's, okay. I think it'd be better though if you didn't use credit cards because they probably just aren't for you. It's probably better to stick with a debit card and a checking account to spend for purchases in your daily life. Now, I know you may want to make sure you don't miss out on the 5% rewards or 2% cashback rewards, but I'll tell you that if you have credit card debt and you're paying interest on that balance, whether it be 20% or 30% APR, any cashback credit you get or rewards credit you get is not even going to come close to what you're paying in interest. So just make sure you understand who you are. Not saying that you will never be able to get a credit card or it's not something you can ever get, but I would focus on building that foundation first to make sure that you understand that you can, you want to make sure you know how to spend less than you earn. And you can make sure that you use your credit card like a debit card because that way you'll be able to extract value from credit cards instead of credit cards extracting value from you. The second is that credit cards are a marathon, not a sprint. And now I know I've actually been guilty of applying for many credit cards in a very short period of time. So it's okay in the short term, but I think it's a matter of credit cards are something that are to be enjoyed as you kind of move forward, especially if you are using them correctly. It's something that you can enjoy the journey as you're going through it because there are so many different credit cards out there with so many different benefits, so many different multipliers that you can really start to build your own unique personal credit card setup that is right for you. And not everyone will have the same setup. Not everyone's going to benefit from the same type of cards, but because there's so many types of cards out there, there's definitely ways to build that right setup for your situation. And it may change depending on your life status as well. Maybe you travel a lot, maybe you don't travel at all, maybe you just focus on cash back. And so there's so many different options and there's a lot of content out there that you can look at to figure out what is the best setup for you. And the last tip I want to mention is that with these credit cards, if done correctly, it can be a really, really fun hobby to figure out how you can maximize your travel and cashback rewards with credit cards. And so, with this YouTube channel, I've been trying to document my journey with credit cards, and hopefully that's been helpful to a lot of you who've been watching my content. And one of the best parts of this is getting to know all of you that comment on my videos. We get to learn with each other. You get to teach me about things that I don't really know about credit cards, and also, collaborating with a lot of my other credit card content creators. All of you guys have been really great and have made this experience really, really enjoyable. And so there's a lot of good information out there about credit cards. So if you have any other questions or concerns, there are tons of things to look at, but I want to just finalize with those 3 tips. And so thanks so much for watching till the very end of this episode, and I will see you in the next one.